Okay, good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond, and it is January the 3rd, 4:59 in the a.m. Eastern Standard Time. Let's begin with Happy New Year. This is our first Swing Trading Today of the year. What we're going to do is, as typical, go over the stock market futures. Then we'll segue over and into members stock chart request, which is where we review the symbols that our members submit for me to review. I received some feedback with regard to the chart setup. So a little bit of housekeeping first. Some viewers preferred the white background relative to the black background. They say it's easier to read the white background. So I'm probably going to set up a poll. So in the meantime, if you can leave a comment below, just let me know whether or not you want the white background, black background. It makes no difference to me. I would appreciate it. So let's get to it. The story of the morning is going to be Apple. Apple, after hours last night, came out and cut guidance for Q1. That is revenue guidance. What that will mean for earnings, not sure yet. But the shares were down over 8% after hours, and more important to me technically was the fact that not only did we fail to hold the breakout point, meaning we broke out here on the 31st, bounced around, held, then we failed after hours yesterday. But more important, the low of the year 2018 was 146.16 the share. What was the low overnight? 145. That's a new yearly low. That's a new quarterly low. That's a new monthly low, etc. That is bad, bad stuff. We undercut last year's lows. Not good. Telling. So what impact is this having on the stock market? Let's begin with the S&P 500. We are down. We weakened up here a bit since earlier. We are down 1.61% on the morning. I went over these charts last night with members on Market Wrap, and we have faded quite a bit since then. So we are down 40.5 points. This bar here, these are all 4-hour charts, so this is a 4-hour bar. Just opened up about 2 minutes ago. And what I'll be looking for is a break to a new low sequentially, a breakdown below this prior low. If that happens, we'll come back down here and retest this lower band of support. If that fails, we're going down to 2350, thereabouts. So we're setting up for a pretty ugly open. What would save it is if we rallied and closed above this upper band of resistance. We may get a rally back up to yesterday's highs. We did get a reversal day yesterday. Could that happen again today? Sure, anything could happen. All depends upon the buying demand by institutions. But this news out of Apple is not good news. It is horrible news. It will have chilling ripple effects throughout not only the investment community, but the economy as a whole. Now, the NASDAQ is just a disaster area. We're down 2.75% on the morning. Here's our trading range. I cleaned this all up to make it really simple. If we break out and close above yesterday's highs, it's off to the races. We're going higher. If we manage to shake off this sell-off this morning, we're going higher. That would be a massive tell. That would be the market saying, you know what? It's priced in, the Apple news. Onward and upward from here. But if we fail, if we roll over and take out the lows of the second, we'll get a speed bump at 6,100. In all probability, we'll come all the way back down here and retest the lows of December. And we continue to weaken up here. Now we're down 2.83%. I think it's all but a foregone conclusion that we're going to retest this support level. And that is at 61.54. Now, yesterday, there was some strange happenings in the currency markets in that we had a big short squeeze in the US dollar. But the dollar overnight has rolled over. We have broken back down below support. We're trying to consolidate here at 96.40. RSI appears to be hooking up. So we may get a rally here on the US dollar off the lows of the session. But oddly, the big beneficiary of dollar weakness is not so much the euro, which had a horrible day yesterday. We have a dead cat bounce today. But what did well was the yen, which just absolutely surged overnight. And I spoke about this with members on Market Wrap yesterday. I said, you know what? This is not going to last. This is not going to hold. We're going to pull back here because we were trading considerably above the third standard deviation Bollinger Band in red. And we're not supposed to be there. But this is a major, major move higher for the yen. And that is putting pressure on the US dollar. So with the dollar weakening up here a bit and with fear re-entering the market, what should do well? We want to take a look at gold. And gold this morning is up nearly a half percentage point. We're at $12.90 the ounce. We're flirting with that 1,300 level. We're in that neighborhood. We're already beginning to see some resistance selling at the periphery of the trading range of 1,300, which really begins at 1,290. So there's a battle going on right now. And if we close above 1,300, that sets the stage for a major bull run in gold in the first half of the year. Now, I mentioned to members last night on Market Wrap, I was not pleased with the daily chart of gold. I think that Apple and the news out of that company will, in the short term anyway, keep a bid under gold. Remember, we are at resistance. I saw topping action on gold yesterday, daily chart that was a bit concerning. Members, that video is posted in the members area. Let's take a look at silver. Okay, so silver this morning is down slightly, but we have some major technical action going on here. And we've been bullish on silver for a while now. And things really started to change back here in December, on December 27th, on December 16th to be specific, when we on RSI began putting in a higher low. And then on the 17th, we broke out to a new higher high, and it was off to the races for gold. We consolidated here right below resistance, forming a bull flag setup. We broke out. Where are we now today? We are above critical resistance, and we're consolidating now. So silver is looking very strong. We are long of silver. We will be looking to add to our silver position fairly soon. I think what we're seeing here is a pause that refreshes. We just went positive on the morning. Let's take a look at crude oil prices. All right, so we have a bit of healthy price action going on here in that we broke out on this 4-hour chart yesterday, a healthy move higher. We've pulled back. We're consolidating here. And the weak US dollar may just help to push oil prices higher. But if we roll over and fall back down into this trading range, you could bet we're probably going to take out this low at 52.55 the barrel on Brent and head down to the lows of 2018 at 50.31. So what we're looking for here is a continuation breakout, which appears to be happening right now in this 4-hour bar. But again, this 4-hour bar just opened up, so this won't close for another few hours. So it doesn't matter where we trade intra-period. What matters is where we close. So I'll be looking for a close above this upper band of resistance. That could set the stage for a challenge of the highs of the second. Let's leave off with the 10-year bond price. Last night when I spoke about this chart with members on Market Wrap, we were trading up here. I said expect a pullback. Just like with the yen, we were very overbought relative to the third standard deviation Bollinger Band. We were going to get a pullback. Now, Does that mean it's going to collapse? No, not necessarily. We've been here a few times in the past couple of weeks. We're here on the 31st, prior to that, on the 28th, prior to that, on the 25th, so on and so forth. So what we're looking for here is a potential that's setting up for a continuation breakout pattern out of this pennant formation. So the trend is still obviously higher. We'll consolidate gains here. The yield moving higher, the 10-year yield moving higher, I don't see it being in the cards right now, not with the economic data being so shaky. And I'm throwing in there the economic data of Apple cutting, not with earnings data beginning to come in a bit shaky. I mean, the fact that Apple has now reported a miss on Q1 revenues, that's only going to give a lot of other companies a reason to come out and say, you know what, China's hurting us too. We're going to miss as well. So get ready for renewed volatility. Let's segue over and into members' stock chart request. Hey folks, thanks so much for watching, and we're going to begin again in just a moment. But first, I wanted to make a really big announcement. I'm really excited about it, and I think you're going to like it too. And the announcement is this. I am going to be raffling off a 1-year gold level membership to the Contrarian Trader. That's right, trade alerts, daily commentary, paper trading simulator, access to the members forum. And I will be announcing the winner on January the 5th, 2019. All you need to do is pause this video, click the subscribe button, click the like button, and you're in. That's it. So don't wait. Enter now. I'll say thank you in advance, and let's get back to the rest of the commentary. So let's keep my comments this morning in context. We have the futures that are down big, so I'm going by closing prices as of the 2nd of January. So a lot can change. Now, the first chart up is Activision Blizzard, ATVI. Weekly chart looking good here. We had a bullish reversal bar the prior week. This week, we have rallied off the lows of the week. The question is, do we close there or do we give it up and then we continue lower? But as it stands right now, this snapshot in time, the path of least resistance, while still to the downside, appears to be moderating a bit. We may be forming a base on ATVI. But what matters here is not one individual stock. What matters is the stock market. Because if the markets roll over, in all probability, so will ATVI. Because 80 to 85% of all stocks trade relative to the overall market. Daily chart. A good setup here. In fact, we broke out yesterday on a daily basis. There you have it. Ever so slightly, but still a breakout. Rising RSI. Now we have not only higher lows, but higher highs. But this is a daily chart, right? So a lot of damage has been done. We want to defer to how we close out the week on a weekly basis. That will instill more confidence. I'm loving the Stokes on the weekly chart. But again, folks, you need to watch out and respect the overall price action of the market. Let's not get caught up with the price action of any one individual stock. It may be able to fight the market very short term, but eventually it will succumb. The next chart up, General Electric. Will a laggard of 2018, and for that matter, 2016, 2017, will a laggard become a leader this year? Maybe. This is a weekly chart. We have a lot of resistance up here at $8 to $8.25. We closed at $8.05 yesterday. I think that it's a foregone conclusion that at some point in time in the future, we're going to get a pullback and a retest of the lows of December. We may move higher up and into resistance at $9 per share before we get that rollover. Daily chart. We have a breakout above resistance on RSI. We have higher lows and now higher highs. We cleared resistance at $7.95 yesterday, But again, at $8.25, we have a resistance, and then above there at $9 per share. I don't see a compelling reason, especially in light of the futures this morning, to go buying General Electric. Not yet. A lot of technical damage has been done here. I mean, simply look at a monthly chart, a technical disaster area. So for all I know, the lows could have been put in on General Electric, but we have not had our pullback and a retest of recent lows. But I will admit, I am beginning to warm up to General Electric. That's probably the first positive thing I've said about General Electric in about a year and a half, 2 years. All right, next chart up, Facebook. At current, for the week, we are up 1.86%. But we are at resistance. So if you bought today, you'd be buying at resistance. We are seeing higher lows on RSI and Stokes. No breakouts yet. I would really like to see a pullback and a retest of recent lows. And if we hold, that would set the stage for a nice rip higher. But again, folks, I have to keep bringing this up. I sound like a broken record. The news out of Apple is not good. So for those companies with a China exposure, and I don't believe that Facebook has a China exposure. I could be wrong there, but I don't believe they do. Same with Google. They may not be as affected as Apple. I think it's going to be more focused on the equipment makers that are going to be impacted by the Apple news. So we'll keep an eye on Facebook. Let's take a quick look at a daily chart. We broke out yesterday on a daily basis. We may get a pullback and a retest of the breakout point. That may set the stage, if we hold support, for us to buy the shares. Why? It's because if we get a big down session this morning, yet Facebook does not break support and it holds, and then we begin to rally back on the NASDAQ and we see Facebook firm up a bit, that's the market telling us a story about the strength, the underlying strength of Facebook, and that we may want to begin to buy. And again, much as with General Electric, this may be the first positive thing I have to say about Facebook in a long, long time. But it must hold support. Otherwise, you could just charge me with being an opportunist because I'm seeing a glimpse of hope. But until we do a retest and until we break out above yesterday's highs, what I'm seeing here is the inverse of a bull flag formation. I'm seeing a bear flag formation, meaning if we roll over and we take out the lower band of support, this is a continuation breakdown pattern. That's going to be an ugly sell-off. So honestly, this morning is going to be a real serious tell for many stocks, in that those who hold up in the face of tremendous selling pressure at the open and then begin to rebound, well, those are probably going to be the leaders in at least the first half of the year. QTT, weekly chart. Never heard of this company, brand new company, at least in terms of being publicly traded. Weekly chart. We cleared resistance this week, and we are levels not seen since the week of October the 22nd. So the weekly chart is looking good. We have a series of higher lows and higher highs getting put in. The question is, do we close above these two resistance levels, or do we sell off? Daily chart. Now on a daily basis, we broke out and we closed there. That's good stuff. We were in a downtrend. We broke out of the downtrend channel back here on December the 12th, and it's been off to the races with higher lows and higher highs. So the path of least resistance has changed here to the upside. And what's all the more bullish is that it's done so in a weak market environment. So QTT is looking bullish on a daily and a weekly basis. Volume yesterday was very good, well above average. Micron Technology, I would have to think that the semis are going to get clobbered today given that they are so levered to the Chinese market. Now, we have obviously bounced off the lows of 2018. We have a new weekly high, but we are still down below two critical resistance levels, actually three. The first one being at around $32.50 to $34 per share. I wouldn't advocate buying these shares. Way too much risk versus reward. So I would avoid Micron. I would really need to see how we close out the week, meaning Friday, final hour of trade. How are the averages and the individual stocks we've discussed and others on our watch list, how are they behaving? Are we at the highs of the week, or have we sold off to close well off the highs of the week, setting the stage for a weaker following week, or have we reversed completely, setting the stage for a dramatically lower following week? So let's really just sit, watch, wait, display patience. I posted the 2019, the year ahead forecast. I'll link to it at the end of this video. My suggestion to those viewers that watched was do nothing. I have zero idea where this market is heading in the very short term. Longer term, in all probability, we are going to resume the downward move. So how this market reacts to the Apple news is going to be really critical. If we bounce off the lows of the day, that's going to be really bullish stuff because it's priced into the market. I don't think that it is. But that's one man's opinion, and what really matters is the market's opinion. So we'll wait and see what Mr. Market tells us by the end of business today. Everybody have a profitable trading day, and I will talk to you soon. Be well. Hey folks, just a really quick thank you for watching this far into the video. I appreciate it so much. And a quick reminder, don't forget about our one-year gold membership raffle. That's a $1,164 value. And all you need to do is just click the subscribe button, click the like button, and you're entered. That's it. And we'll announce the winner on January the 5th, 2019. I'll see you there. Let's get back to my commentary. And if you have any questions, leave a comment below.